for starting point. So I think that's this kind of balancing act. But of course, exactly where they land is going to depend on every central bank.
Okay, let's say, and I know this is difficult to do, but you're a great. I mean, you're a brilliant central banker, actually. So let's say that inflation that stays up, but you have a depressing, of course, this depresses economics. I'm not sure even for the ECB whether they would hike or whether they would cut at this point. I mean, would it be something tricky also in 5-6 months when you have a better picture of inflation?
And so, this impact of, higher risk to inflation, downside risk to growth, this is the same for every central bank. Then they have a different mandate. The ECB has a mandate focused on inflation. Yeah, that doesn't mean that it's going to completely disregard the impact on growth. But I think if the ECB's thinking, they're going to think, well, what we don't want is for inflation expectations to get out of hand, and then we have to hike into possibly a recession. And I think from the way they look at it, makes a lot more sense to signal vigilance, signal even hawkishness at this stage, and hope that they don't need to act. And if they do need to act, if they do it early, then they can have a fairly limited move and not stay there for very long. Which I think, in terms of the ultimate growth impact, would be the best scenario. But I don't think they will signal anything very strongly tomorrow, because the reality is nobody knows and they don't know either.
So when it comes to the Fed, were the market just ahead of themselves in terms of expecting either 2 or even 3 cuts this year?
Markets are expecting cuts from the Fed and hikes from the ECB. This is very strange, in reaction to the same shock. And even though inflation is almost 100 basis points lower in Europe, this is very odd. So
does that tell us? I mean, does that tell us that the market prediction is wrong, or is it a different kind of investor that are thinking of that?
I think it's telling us that one of these two predictions is wrong. Yes. Possibly both of us. But no, I mean, look, prior to the war in Iran, the way we were looking at the US economy is that the growth momentum was pretty strong, that the labor market was imbalanced. You could call it a fragile balance, but nevertheless imbalanced, and inflation still too high, quite some distance from the Fed's target for the 6th year running. And so in that context, for us, the Fed was not going to be in a position to cut anyway. And now, with risks to inflation having gone up, we still see that they don't manage to cut this year. There is even a risk. I don't think it's going to happen, but there is even a risk that they signal a symmetric stance tonight, where they say, look, if the shock is bad enough, maybe we even have to hide. Certainly, some of the members of the FOMC were already in that mindset as the last time. Will it be a majority this time? I don't think so, but that's an outsider.
What happens to dollar?
Well, the dollar, interestingly, hasn't rallied nearly as much as you would have expected, given the size of the energy shock, and almost certainly that, in large part, because of the front-end rates having been so dovish in the case of the Fed, whereas everywhere else they make more or less as they would expect.
So, it's about, overall, if you were to take a calculated guess on what kind of economy we're left with by the summer, I mean, what's your bet on? Like a much worse economy, or could things stabilize?
So by the summer, we'll know if it's going to be, protracted shock or not. Hopefully, and I think that's still the most likely scenario, if you, believe what President Trump is saying, that he seems to want to wrap things up, in the next few weeks. The economy can hold up. This is what we're hearing from clients. This is what, unless you're directly impacted by shortages, and most companies are not. Right now, they're staying focused on their long-term plans. In Europe, there's still a lot of investment in defense going on. Everywhere, there's a lot of investment in AI and tech going on. That's going to continue to power the economy. But of course, the longer this shock lasts, the more you're likely to see an adverse impact on the consumer. And consumer is everywhere the driver for it. If the consumer stays at home, that's going to be a problem.
Isabel, thanks so much. As ever, Isabel Mateos, Group Chief Economist at BNP Paribas. Now, coming up, we'll be speaking exclusively to Sander van Noordende. He's the chief executive of the talent company Randstad, about a critical shortage of workers that could stall AI growth. We'll talk about that next, and this is Bloomberg.
Earners online EPA recognize the real salaries and that we for.
At Queen City Home Store, we have everything you need for every room in your home, from appliances and electronics to furniture and mattresses. Our whole home experts are here to help. Plus, with flexible finance options made just for you, upgrading your home is never been easier. With our private options and express deliveries, you'll know exactly what you need when you need to. Find more style at a Queen City Home Store near you or at queencityonline.com.
Should have held that. I did not get the best entry there. I should have. Um,
We've been licensed for nation.
with our rotation back,
We've received purchase orders.
higher inflation this morning. We're waiting for the big news this afternoon with JP when the Fed's here for cuts. They're projecting rate cuts for this quarter. With the war in Iran, inflation is just. I mean, look at gas prices. I mean, we're heading towards $4 a gallon around the East Coast here, in the New York area. Well, New York is a lot more, but 40% of the workforce. Over 50 cents higher since in the past few months. And my first entry this morning here, I'm trying to rotate back up. Didn't get the best entry, got it here, took out early, and then I should have held this one, but if I get a better entry here, I could have, should have held it. But my target is the rotation back to the upside here. This time, it might go for this.
Where,
Because we displaced above, we came back and displaced the IB level, and now we're targeting the POC here from this break of structure POC, this range. That was target, which would have netted me if I could have held it from here. Where was my entry? Right here. My entry is here. I'll do 200 ticks there.
Of the general market, I would say.
That's my problem. I can hold the trail. I just held a little longer to trail this position. It could have been trailing. The Nasdaq is already. Nasdaq looks a little stronger than gold right now. It's already moving, rotating back up.
takes the most
At 8:30 inflation data, I mean, it was already priced into, everyone panic dropped it. As we can see here.
I'm an AI optimist. I'm an AI optimist. I think the world needs the productivity.
It was already priced in to the drop.
Jobs impacted
Look
by
at that.
we have seen
Since London.
7% up in the next 5
London.
years. With a high case of
Gold drops 1700 point ticks. And now we're getting a rotation back. Trying to find back value here because we're way below the weekly value. Here's a weekly value area level. There's our VWAP here. Range back in the. This is 2.5 standard deviation level. Rotation back in. Went down to extreme levels here, and I really think we can reach this today. This level. Let's to hold there. We got a little bit of something there. I mean, that was 0.5% on that, but I'm really trying to go for 1% here. I mean, that's we gotta be able to target 1% per day. What we've been averaging on a weekly basis. Despite our break evens yesterday, and our we lost 1.5% last week, but we got that back.
There's no lot of mobility, there's no lot of grids. So this needs to get answered by, I would say, more certainty in the overall economic environment. And
But
obviously,
right now, we're just waiting for
of the recent weeks.
economic news.
Situation do not help. Therefore,
Waiting for the feds to come on at 2 this afternoon. Not sure if I'll stick around for that yet, but we'll see.
Expansion or rethink hiring in Dubai.
I really know this is in the last, so it's hard for me to say that. But in general, I think companies have been very reluctant to hire across the globe. And that continues to be the case. It's more driven by the overall economic uncertainty that by the particular region. But obviously, the world and our clients will be better off if this situation in the Middle East gets put to rest over the next couple of weeks.
In the meantime,
So you said you
gold swinging back again.
market, which are actually quite healthy, or the services, for example,
Heavy volume here.
where that are you?
Well, that's the
Get some more coffee tomorrow.
so area. The
We're
other
gonna look for another setup.
is
If it bounces off this POC
if we look at our
and buyers protect this, we can really go back up here.
couple of years,
We're just waiting to react to this.
the high tech industry, but also life sciences, but there's still strong demand for talent.
But do they need a catalyst? I don't know whether it's an interest rate cut or something like that, or do you think, are those pockets actually moving along fine?
Well, I think let's say a catalyst is always welcome, but I would say by and large, more certainty about where the economy is going and where demand is going for services and goods of our clients. That what clients are generally looking for. They need that confidence that they can make that investment, whether it's in infrastructure, whether it's in technology, or whether it's in talent, and that's highly.
Do you worry about your own company or your own services? Does AI also make in recruitment services more difficult to hire?
AI is a tremendous opportunity for us at Randstad to do a better and faster job for our clients and talent. AI enables us to be better in touch with more talent, and that's what our clients are looking for. So we can serve them in a better way with the help of AI and our platform, of course, than we could before. So I think that AI is good news for us.
You've said in the fact that the traditional university process model is actually broken or breaking down. Has higher education become less relevant now?
Well, I think in general, education is as relevant as ever before. But the notion of okay, you graduate from high school, you go to college, and you go do something in an office. I think that part is not as straightforward anymore as it used to be, and it doesn't have to be, because there are great careers in skilled trade. And actually, what is very interesting, there's a convergence between, I would say, traditional blue collar and white collar. Because if you're in the skilled trades, you need technology skills. Because all equipment, all machinery these days is connected. There's monitoring going on. There's maintenance going on based on what the monitoring says. So the technology skills in the skilled trades have actually become a lot more important, and that has made the career track also more interesting.
What does the workforce look like in 5-10 years? How different will the workforce look like than it does now?
Well, I think if you look at these trends, skilled trades will become more important. Healthcare will become more important. I would say the logistics will become more important. Engineering is definitely in demand in terms of course, AI infrastructure.
It's like a retracement. Gold is retracing to go back up.
And then you go back to
Still looks bullish because we're still above the IB, the initial balance level here.
Need more infrastructure for the public. Climate change. We need green infrastructure. We need to protect our.
True right here.
Engineering, I would say, is also a very
One trade this level.
Thank you so much for your time today. Sandra van Norden, the chief executive of Randstad. Coming up, we've got the widening geopolitics and the implication of the Iran war with Charles Litchfield and Daniel Tannenbaum. That's coming up next, and this is Bloomberg. Good morning, everyone, and welcome to the Pulse. I'm Francine Lacroix here in London, and these are your top stories. Iran vows to revenge the killing of its security chief and launches a first
To displace this POC to show conviction that buyers, aggressive buyers, come in here to take us back up to value level.
Well,
Take back up here, looking for, but
Marks and co-founder of Oak Tree Capital
we're still an overall downtrend today. Be careful with that.
So Iran has signed a deal to resume oil exports by Turkey that avoid the Strait of Hormuz. It comes as the U.S. steps up efforts to force the reopening of the vital passage. So let's bring in Bloomberg's energy reporter Anthony Di Paola in Dubai. Anthony, thank you so much for joining us. So first of all, will the rerouting of Iraqi oil have actually much of an impact on supply concerns?
Good morning, Francine. Yeah, everything is a help. It will add some oil back to the market, but clearly not enough to make up for what we've already lost because the Strait of Hormuz is shut. So this will be some oil that's produced by the Iraq State Company as well as the private companies in the northern Kurdish region. That will bring about 500,000 barrels a day of oil back to the market if things go ahead as planned. That's against a shortfall of something about 15 million barrels a day that we're losing with the Strait of Hormuz being shut. Simply, Gulf producers cannot get oil on tankers and get it out of Hormuz, so it's not moving. We've seen lots of producers already shutting in production. Iraq, for example, about 3/4 of its output is already shut in. So they're trying to revive some of that and get at least some oil moving through the north. But that's been a problematic pipeline for them in the past, because they've had, over the last several years, it's been largely halted because they've had payment disputes with Turkey about pipeline fees. They've had disputes on revenue sharing with those private companies working in the Kurdish region. So it's a big dispute and been a big problem for them. So what they really need to do is focus on getting those details sorted out, at least for the short term, to keep that oil running for now, Francine.
But Anthony, the oil market's focus, of course, remains firmly on this choke point. But where do you see oil going the longer that Hormuz remains effectively closed, that there are no ships passing?
Yeah, at the moment we're around about the $100 point. Traders are really watching to see how long that closure remains, how long Hormuz stays shut, and then they're also looking to see, are there any damages in production in export facilities within the Gulf. The longer it stays shut, the longer it takes.
Yeah, we're bullish.
Back to normal once we do have an opening. So if there are fields shut in, it becomes much more difficult to bring them back.
Inside bear here. Any of these could have been good entries. Now look for a retrace, swing back to this DOC to get an entry here.
As this conflict goes on. So that's really what things are watching. And with the idea that the longer it goes on, the higher the price potentially goes, Francine.
Anthony, thank you so much, Anthony Di Paola there, Bloomberg Energy Report. Now let's get more into the geopolitical situation and discuss White House military and economic strategy. With me now, Charles Litchfield, Director of Economic Foresight and Analysis at the Atlantic Council think tank, and Daniel Tannenbaum, Partner and Global Anti-Financial Crime Practice Leader at Portfolio Markets. So thank you both for joining us. I mean, first of all, I had a couple of conversations in the last 2 days with the President of Finland, with the Prime Minister of Greece, and they're worried about the inflation, of course, impact, but they're not ready to commit European troops or anything to try and basically keep the safeguards around the Strait of Hormuz. Like, how can we weigh the economic impact on the trade?
First of all, I think the Europeans are unwilling to commit anything for that because, first of all, they're not aware of what the US plan is. And even if they commit ships, convoys, simply to help ships get through, Instance said it very clearly that they consider any US ally to be a problem. They'll allow non-US allies through, but it's the Iranians who can decide who can come through the strait or not. So they need to know what the US plan is before they commit anything, irrespective of the consequences for inflation for the next 2 weeks. There's a little bit of slack in the markets, and people are trying to figure out first what happens. And so we have a few more weeks, I think, before there's a big problem on inflation. But the consequences for Europe will be huge. I think they might be even bigger for Asia.
Well, I mean, again, the problem is that you don't really know the timeline. Is that the market today is positive, Dan, but actually we don't know when we know about the U.S. plan and what the consequences will be.
Well, that's right. And to Charles's point, we don't know what the objectives are. Is it regime change? Is it eliminating the nuclear weapons program that was supposedly eliminated last summer? What are we trying to accomplish here? I mean, President Trump is exceedingly good at any subject, and at least getting.
You got trapped bias here. Bears have absorbed this, and
let's be clear, this is a deeply unhuman situation in the U.S. with 13 American service members killed already. Some in a
now if we break below our pivot point here, we're gonna look for a shorting. This is still weak. This market is still weak. We're not gonna get back to value.
But so is this, line of thought, but actually gasoline prices hit $5. That's when the president.
You're taking out all these bulls, liquidity taken, these bulls taken.
Trump has been in office.
Yeah,
The markets think they can discipline him.
I don't see any more buyers here.
Because the markets think they can discipline him, their reaction is actually quite soft. Most people are saying at this point that markets are being complacent, and yet here we are, but they don't probably be. But because they think they can discipline him, their reaction isn't as big, and therefore he thinks things are fine for now. I think $5 is a big psychological barrier, but I also wouldn't underestimate his willingness to see a result in Iran that he can tell is a victory. So there's another sort of view out there that Trump will simply declare victory and leave. But it's not only his decision, and when there are clearly still US allies and US partners being bombed by Iran, it's very difficult for him to declare victory.
I mean, how does he sell this at home?
And that is the issue. I mean, he's talked about this imminent threat, but you saw with the NCTC head resigning very spectacularly yesterday, saying, and he was a true MAGA supporter, there was no threat from Iran. I don't know if he does sell this at home. The other issue that adds complexity is he tells Americans to tolerate payment related to Iran while granting license and relief, bringing $150 million a day to Russia through sanctions relief, which that's also an unpopular conflict, although not nearly in the press as much in the U.S. So there's a lot of mixed messaging that I think even someone who's not following politics can't really understand what the president's trying to do here.
I mean, again, he needs a good economy. The president does. If you look at the midterms, which frankly are like, 5-6 months away. So how difficult is that going to be achieved?
If his only objective was winning the midterm or minimizing his losses, he wouldn't have started this war, and he would have had a much more tepid approach.
NASDAQ just pushed back up, showing strength.
You have to assume that Trump,
Let's see if gold can follow or not.
He'll start scaremongering about
NASDAQ is certainly stronger here.
But I don't think this is his priority. He actually cares about his impact on the world, and he's been convinced that this was a good idea. He might be a little bit fearful of what he's unleashed, but that's never what he says publicly. And so this is his focus for now, not the midterms.
But what do you understand this to be? So was it just, trying to get a bigger hold on the reserves like he did in Venezuela and Iran? Or it's difficult to 100% understand.
You've got to get back above IB to continue upwards here. Otherwise, just swing here and dip.
The success in Venezuela, but he was told that this would be very difficult. The same people were briefing him. This is a risk, Mr. President.
We need more aggressive buyers to show up.
His own terms.
We need conviction above IB.
Trump control over oil comes out of Venezuela, and the U.S. now control. Although some of that money will make its way to Venezuela, I think it's important to add that. So that was so successful that he thought he could do it in Iran again, without the objectives being correctly set out, and also without correctly considering everything that could happen in the strait.
And I mean, one of the things that we've been trying to
Protected here by the buyers. Buyers protecting this level, protected this level. Now,
to do so.
swing.
I think that really feeling emboldened, especially now with this line.
Still ready to move.
Europe.
We need to get above
Going to
this,
turn around on this, although
above
you
IB
hear
level.
leaders saying, like, how can we totally abandon Russian energy? But I think the overall consensus.
Looks like gold is stronger than NASDAQ right now. NASDAQ is still below IB.
And I think
Now I can look for a buy setup.
reason that the US used to be looked to from a policy standpoint that I think we've seen it in the last few years.
If we can
So
hold.
that creates a real divergence. It is important to note, I mean, that President Trump has only imposed sanctions in the form of 2 designations since returning to office, as opposed to thousands of designations under Biden's term and additional by the EU. There were 2 big designations. There were 2 big designations, but I mean, he used the sanctions quite sparingly. So I do think that divergence creates a problem. There's also things that are now legal in the US that are illegal in Europe. So there's the potential for a conflict of law issue there as well.
I mean, to the point that we were making on oil when we both sat down.
This bear has to stay inside this.
On everything that's happening in the Middle East. And
Sellers have to stay inside this bull candle here.
was largely undisturbed. How was it underestimated the power that Iran had in terms of those small but deadly drones?
Well, I mean, I think the point one that Charles made is Venezuela gave this administration a lot of confidence in filling it.
Good sign inside the handle. But we're still in the range here.
3 generations.
We still can't stay above IB.
Last year.
Strikes last year. It's ironic now that the West needs Ukraine to help with drone interception technology.
No setup.
Being used in the Gulf to defend.
Still showing weakness.
Drones. So it is a bit of a threat, and that's been the calculus. The cost of this war is so significant. Firing millions of dollars in missiles for $30,000 drones just economically makes no sense. So it is ironic that now the cards are come up with Ukraine, who is being called in to help, despite the fact that the U.S. is providing extremely limited aid to Ukraine right now.
Yeah, but this was never about money.
Yeah, I mean, first of all, on Ukraine, they have to be quite careful in how they use this new leverage. I absolutely agree that it is leverage. But going to Mr. Trump, and saying, look at all the cards I have now, Mr. President, would probably provoke it. They have to be very careful in how they calibrate this new leverage that they have.
Zelensky was careful yesterday. I was with a group of Ukrainian parliament members last night, and they were a lot less careful with their words in terms of saying, I think Zelensky wanted to say.
Both gold and NASDAQ are below IB now.
This is our imbalance at present.
Ukraine's a lively democracy, and that's why we support it, at least at the Atlantic Council. The point I was going to make on the money is it's very important, and even for the US, for its resources are finite. We're already seeing it in terms of air defense, that the resources are finite. There's a 10-year waiting list, or what the 10-year waiting list, even before this war, for Patriot missile system. And so you're seeing even US resources being redeployed from Europe and also from Asia. We were meant to have a pivot to Asia, already started under President Obama, but Trump also cared about this, and some important advisors in his administration also cared about it. But even for the US, though sometimes it appears that the US budget is unlimited and the dollar also provides the US with these resources, even for the US resources are finite.
Charles, is there a worry that actually, the US can't really go to Putin and say stop this war because they're doing the same in Iran?
No, I think that's a very important point, that the US doesn't have much of a foot to stand on anymore. I mean, it is obviously more complicated, and the Ukraine didn't represent a threat to anyone. Iran did represent a threat. It's important to say that. And the IRGC was considered a terroristic organization by the US, but also most recently by Europe. It had been added to the European list. So let's not minimize the threat that Iran represented. But the Russians are very good at reversing and inversing arguments to make sure that the US comes across as hypocritical. That's one of their big specialities.
I mean, what do we know about also this intelligence sharing between Russia and Iran?
I mean, there's more reports of what type of satellite data and munitions data is being shared between Russia and Iran, and still there's talks of deals. Dmitriev was in the US, in Miami last week, with Witkoff and Jared, trying to hammer out a deal. And as a reminder, Witkoff hasn't even been to Ukraine once since he's taken on this appointee role. So it's sounding very real that this intelligence sharing between Russia and Iran is there. And it makes it all the more confusing when you look at the sanctions relief that's going towards Russia right now.
Charles, I mean, there are 18 central banks this week that have to make a decision on what to do with interest rates. I mean, we're expecting by and large all of them to stay put. But I mean, is there a real risk of a policy mistake, given that even if you hike rates, it doesn't have that much of an impact on the supply shock from oil that could feed into inflation?
Yeah, I mean, this is the perennial problem with central banks trying to differentiate between demand-driven inflation, supply-driven inflation. We had that problem during COVID, but you're absolutely right that this new crisis prevents them from continuing on a cutting cycle. And so now the decision is between staying put, increasing interest rates. I think at this point it's pretty clear that most of them will stay put, but depending on the duration of the crisis, we may have to embark on some increases, which is exactly what they did not want to do.
All right. Thank you both for joining us. Charles Litchfield, the Director of Economic Foresight and Analysis at the Atlantic Council think tank, and Daniel Tenenbaum, Partner and Global Anti-Financial Crime Practice Leader at Oliver Wyman. Coming up, we'll get more insights on the White House strategy with Douglas Redfield from International Capital Strategies. That's next, and this is Bloomberg.
When the board made the decision to appoint me into the CEO role, my chair at the time sat down with me and said, succession starts now. And it was made super clear to me that one of my biggest accountabilities was developing that next generation of leaders. So that's always been front and center. The other part of the question, Francine, was what's the right time to go? It's, if for those of us, if you have the luxury of making that decision on your own, because there's plenty of CEOs who don't make the decision. It's always hard. I'm sure when that day comes, it'll be a combination of personal perspective, but also what we believe is right for business.
Well, that is Mike Henry, the outgoing chief executive of PHP, talking to me in January about succession and wanting to step down for Leaders with Francine Lam for the podcast. Now, Henry will hand over the reins to Brandon.
All right. Well, we'll be back later for the
about 14 hours ago.
we'll see this afternoon. We're heading to lunchtime, and it's just markets are just ranging right now. There's no volatility.
Tomorrow, formally headed the theme parks, cruises, and consumer
movements.
will stay on the board as a senior advisor until on the
FOMC here.
to our story on the conflict, of course, in the Middle East.